Alright guys, welcome to the video. Anthony Special here with Special Analysis. Going to be talking about this short play here on crude oil. Part of the analysis experience includes day trading, swing trading, position trading of stocks, futures, forex, cryptocurrencies, options, things of that nature. My goal was to build a resource that every trader can benefit from, right? And rather than trying to nickel and dime you from six different ways, like most publishing company and guru style companies do, I don't want to be like them. Okay, I just don't. I want to be the guy that just continues to provide you with value. You know how much it costs every month to be part of the experience, and ultimately you find it as either an invaluable resource and continue to stay with it, or you decide it's a little too advanced for you, it's not for you, and you go on your merry way. Of course, for me, at the end of the day, it's all about the trading. That's why I do this. My clients who stay are just ultra committed to becoming the best version of themselves as traders, right? And that's what I am too. I'm ultra committed to being the best version of a trader that I'm able to be. I invest ungodly amounts of hours into research and reading and learning and psychological training and emotional training. There's just so much there, and those nuggets I get to share with you guys on a consistent basis. So let's talk about this setup here. This was a swing style trade setup. This is on light sweet crude oil. For those of you who don't know, this is kind of my niche market, if you would. Not to say that I can't navigate them all through the same exact approach. It just this has been what brought me into the market, and this is where I've truthfully made the most amount of money. So I want to talk about the price action here. We're going to take a little bit of a look. You can see we were pushing higher here. We ran into just short of 88 here. We made a little double top, and we were very unsuccessful in trying to push through that. So I saw price break down here. I was a little concerned about this kind of consolidative state. Looking at this prior high here as well, a little bit concerning for me. This is at 79.35. I'll just drop a line here so you can kind of see exactly what I'm looking at. But we held this area pretty nicely, all right? Most importantly, what I was focused on was this low that pushed price back up and then was ultimately broken fairly aggressively. So if we were able to continue to stay below this low, which was at 80.70, and this was the range where I kind of alluded that this is going to be where we're either going to push lower or violate and go back higher. Specifically, again, looking at this low, this was the area where we were walking up this trend line. And ultimately, we finally broke down, all right? We finally just absolutely tumbled today. We identified it live in the live futures analysis room. We identified the short-term double top, the break of the neckline, the push through the prior lows. I mean, we all the way down to 74.50. We had set targets along the way. So really a great intraday trade, and on a swing trade basis, it's really kind of come to fruition here. So you could see, I mean, I'm a big advocate. Pay yourself, protect yourself, right? You never know when the opposing party's going to step in and, start dumping large orders to absorb the price action and whatnot. So it was just simple, right? Just as we keep dropping 100 ticks, keep taking more and more and more off the table here. So, we'll layer into probably 72, maybe even 71 here, depending on how quick we come into this channel structure. But we just closed below, what I would consider relatively meaningful support. So we settled here below this channel line. If we stay below it, and it may not necessarily happen tomorrow, but my anticipation is we continue here to the downside. But I want to bring this to your attention because, you may be a swing trader, right? You may say, you know what, I don't have time to day trade, but I like swing trading. Well, when something like this sets up, it can be traded in the futures market, it can be traded through ETFs, it can be traded through a variety of options. So just because you go, I'm not a futures trader. Okay, but you can still take the exact same trade through some other asset class that will allow you to mimic the price action, right? There's standard ETFs, there's leveraged ETFs, options on the futures contract, options on all of the ETFs. So there's plenty of ways to play this move. And I provided all of them. Why? Because when I feel that something's meaningful, I'm gonna share it with my family of traders. Okay. The goal here is to just continuously provide you value. So the idea here was to consider shorting this market or one of the assets which mimic this market, whether it be an ETF or an option, within this box here. Okay, as high as 80, no lower than 78.50. And with that, start peeling profits 77, 76, 75, 74, 73, 72, 71. We're just going to keep taking more and more profits as we continue going lower. Why? Because again, like I mentioned, we don't know when we're going to get a super stiff bounce, all right? So one of the things that a lot of traders don't do is they don't pay and protect themselves. And I think it's really a disservice that you're doing to yourself. And I say that because I've just witnessed it, right? People are driven primarily by two emotions, fear or greed, all right? Fear is not taking the trade at all, all right? Or tightening the stop too quickly or whatever, not following your plan. Greed is saying, yeah, but it's making me so much money, why would I take any off, right? Nobody goes broke paying themselves, right? And it's really one of those hard set rules that I have and that I am a strong believer in, is that if the market offers me money, I need to take it, right? Like I need to take it, because things can change in an instant, right? It takes one geopolitical move, one decision to be made. It could be among millions of things, right? Or just some large bank or firm comes in and says, you know what, we're going to buy however many thousands of contracts at some level, and it ultimately stops price from going lower. But I've learned over the years that if I pay and protect myself, right, I got to know what my risk is, I got to know what my potential reward is. If I start paying and protecting myself, even if the market goes against me and I took a small profit, I'm still happier with a small profit than a big loss, okay? So take my profit, I advance my stop to my entry slightly into the profit to cover any bid-ask spread, which is minimal on a futures market, and I just take some profit, okay? And then I take a little more, and I take a little more. And I'm a big proponent of spreading the position out, because you just never know when it's going to run. Even when I intraday trade, all right, my traders know this. They go, as soon as my position starts pumping me in the profit, I take a chunk off, I move my stop to break even, whether it's to the upside or the downside, and if the market offers me more, I will gracefully accept it. When the market does offer me more, as I layer out of that last 50%, 25%, third of my position, I'm pumping those targets out far, because if they do get hit, wonderful. I'm going to, those are those trades that offset any losses altogether, right? And the profit I've already taken, I'm very happy with. More often than not meets my entire day's goal. And I just let the market do what it's going to do. But it takes all the emotion off the table when you've started the process of paying and protecting yourself. This is something I go into great depth with my traders, live every day. I talk about it in editorial content, so on and so forth. So this is one of the many setups from a swing style position or trading position style of getting into the market that I have offered, right? We look at stocks, futures, forex, cryptocurrencies. We look at day trading setups, swing trading, position trading. And this was one that we talked about not too long ago. It finally manifested. Listen, when you're swing trading, you have to be patient. You have to let the market come to what you need it to do. You have to be patient. You don't get to micromanage it. Where when you're day trading, if the market's not moving in your favor, or you feel like it's bouncing back and forth, you can make different decisions. But I held firm on this, even though we were having a hard time going lower, and I didn't at any point say, hey, listen, I think the market's going to reverse. I still believed wholeheartedly that if we stayed below this 80-70, that there was a chance to still get a push here, right? We had made almost a double top, we made a lower high, and then we had a wide consolidative state here based around this prior high right here. And we sat here for quite a few days. And that happens, guys. You know what I mean? Like, it happens. Sometimes the trade's gonna trigger and it's just gonna hit and run. Sometimes it's not. This is an instance that it didn't. But, even from 78.50, right? Even from 78.50, let's just say you took the lower entry. You're still 450 ticks in the profit at $74. That's pretty good. And that's $4,500 a contract. All right? If you took the higher run here at 80, then you're doing really good, right? You should be at 600 ticks, which is $6,000 per contract. So, and again, if you're trading it with an ETF, you're trading with an option, so on and so forth. The theory is still the same. Pay yourself, protect yourself. Nobody goes broke doing that, all right? Yes, sometimes you'll get stopped out a little prematurely, but more often than not, either the market's going to continue in your anticipation or it's going to go against you, and if you had that opportunity to pay and protect yourself, you weren't in it for the loss. So it's something I'm a big advocate for, but I want to share this opportunity with you. I know I share a lot of day trading opportunities. This was a swing trading opportunity that could have been played in the futures market, in the stock or the ETF market, and also in the options market, all set up to do the exact same thing. And this is one that I shared. Why did I share it? Because I believe that it had integrity to it, right? It met the criteria which I take my trades based upon. Right? And doesn't mean that every trade I take is right or it's profitable. But that experience has led me to kind of isolating opportunities that I believe have higher integrity than others. And trading is a business of probabilities, which I go in depth, in my website on kind of the things that you need to understand as a trader, the things you need to employ as a trader. And until you do those things, you're not going to find consistency. Right? Trading is applying your edge consistently, and your edge is your trade plan over and over and over again. And that edge should yield you being correct more than wrong. Right? So you should be at that 50% or better, that your trades are accurate based on your edge or your trade plan. And then it comes down to risk management. Are you paying and protecting yourself as the market really offers that opportunity to do so? And if you are, more often than not, at least what I experience is, all right, the market didn't give me everything I wanted, but I took some profit, I got stopped out, and I wait for the next opportunity. Trading is not a business of getting rich quick. And this is a misconception a lot of people see on YouTube and on social media and whatnot. Believe it or not, it's not to discredit that most of them do make really good money trading, because they do. But they also have an extraordinary revenue source based upon what they're selling you, okay? And most of them are selling you some form of information or some form of course or whatever, and there's nothing wrong with that. I'm a huge fan of education, okay? But are they giving you their personal, undivided live time? And that's not what most people are doing, right? They're giving you an idea in a Discord. But if you have a question, you may not get an answer while the trade's transpiring. Or they're not able to say, hey, listen, XYZ is happening during this setup, and it may cause this or that to occur. So the way I do it is I do it live, right? Especially when it comes to day trading. When it comes to swing trading, I update it consistently as the market dictates, right? So understanding analysis, interpretation, and expectations is built on the evidence the market provides in a certain moment. As that moment continues to evolve, the analysis, interpretation, and expectations can as well continue to evolve. And that's where a lot of people fall short. They go, well, if this works, that works. Sometimes it does. But especially on a shorter time frame, more often than not, there can be some manipulation that needs to be identified quickly so that it can be taken care of. But I want to share this with you guys. Again, I do a lot of day trading videos, but this was a swing trading video, and I just wanted to show you these levels. I was specifically looking at the high of this candle, the low of this candle. Should we push to 82? This idea would have been violated. But if we kind of held this range here, which we did very nicely, we had anticipations of starting to cover the short here. 77 all the way down, and if we take a breakthrough here, I have some further downside targets in mind that we will be discussing, with the folks that are part of the analysis family. So if you guys want to learn more about that, there's links below. If you have a question about trading or analysis that I can answer for you, please feel free to leave it in the comments. I will certainly respond. If you enjoyed this video, if you learned something, please like it. If you haven't subscribed to the channel yet, please consider doing so. I do post content fairly regularly, and it's really geared towards education. Right? Like a lot of traders aren't at the level that they're ready to work with me. Okay, they're still buying all the gimmicks, and they still think that the next gimmick's going to fix all their problems. And the traders that come to me have bought all the gimmicks and realize that the gimmicks are unsustainable because they'll only work under certain market conditions. And volume and price action, order flow, works under all market conditions, and that's what I focus on. So I'll see you guys in the next video. God bless. I appreciate your time as always.